Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, March 8th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well, within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index having a counter trend bounce of plus 1.2% last week as it broaches the top end of its respective range as it continues to signal bearish on a 90-day trend duration. That's primarily a consequence of the safety currencies in the Japanese yen and the Swiss franc down versus the US dollar last week, down minus 1.7% and minus 2.4% respectively, as they continue to signal bearish on a 90-day trend duration. On the other side of that, you have the British pound, which was down minus 0.7% versus the US dollar last week, and the Canadian dollar up 0.6% versus the US dollar, both signaling bullish on a 90-day trend duration. Moving across asset allocations here, you take a look at commodities. Those continue their inflation higher, with the CRB index up another 1.6% last week to now plus 21.0% in the last 3 months. You have WTI oil continue its inflation higher, another 7.5% to now plus 41.8% in the last 3 months. And touching on the agricultural space and corn, that inflated another 0.6% to now plus 29.5% in the last 3 months. On the other side of rate-sensitive asset allocations, you have crowded, low short interest, momentum stocks getting pounded, with Amazon and Tesla down 11% and minus 29% just in the last month alone, with rate rising exposures getting pounded in kind, with 10-year yield up 16 basis points last week to now plus 60 basis points in the last 3 months. Consequently, you have gold down another minus 1.89% last week to now minus 7.5% in the last 3 months, and down to new cycle lows, down minus 19.6% from its August peak. Touching on this bout of volatility last week, if you take a look at cross asset class volatility, not much had changed. If you take a look at FX volatility index and high yield spreads, indicates perhaps just yet another collapse in crowded equity manager positioning. However, what you do want to take a look at is the tech sector in the NASDAQ, which may be teetering on what would be a phase transition from bullish to neutral to bearish trend, with the volatility component in the VIXN teetering on trend, which comes in today at about 32.25 or so. So with that, if you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.